Hello, my dear students. I am Raj from Ravilla KRA Vidyashram Matriculation Higher Secondary School. 12th Commerce, Unit number 2 and Chapter number 4, Financial Markets. So, in your Commerce subject, you will have the two parts of financial markets. First part, it's talk about the introduction to financial markets and capital market, money market. Then part 2, the financial market, it's divided two chapters. First one is stock exchange and another one is Securities Exchange Board of India, SEBI. Okay, the first part, financial market 1. What do you understand by the financial market? What is that? What is financial market? Financial markets we divide two parts, finance and markets. What is meant by finance? The finance is nothing but money or monetary value and the economic. Okay, like this, these are all the financial. Yes or no? Then what is market? The market is nothing but where the meeting place of the buyer and seller. The meeting place of the buyer and seller. That is called as a market. The financial, it means, is nothing but the commercial activities of providing funds and the capital. That is called as a finance, and market is nothing but where the buyer and selling, where the people they are trading or traded. That place we called as a market. Yes or no? The next one, the chapter synopsis. In this chapter, it contains the meaning and definition of financial markets and the major scopes of the Indian financial markets and what are the different types of financial markets like debt market, equity market and spot market, forward market and over the counter. Like this you will study. The next, what are the major roles of the financial market and how the financial market it helps to grow the economic development. Then what are the major functions of the financial market and what is the difference between the new issue market versus the secondary market. Before we are going to enter the chapter, we are going to learn what are the learning objectives of the financial markets. The first thing, participants in the financial markets. Who are all the participants in the financial markets? So like a lender, borrowers, investors and supervisory and regulatory organizations and the financial service companies. The financial service companies like Bajaj Financial Service and the HDFC, okay, like Life Insurance Corporation. Then these are we called as a financial services companies. Then the next one is the financial intermediaries. Okay, the financial intermediaries is nothing but there are two aspects of people. One side is the investor and another one side is the borrowers. Okay. Then the next one, the business of financial institution. What is the business of financial institution? It's nothing but what is that? The financial institutions are like banks. The two different types of the banks are there. Yes or no? One is the public bank and another one is the private bank. In that commercial banks and investment banks, insurance companies, brokerages and management investment companies and saving and the loans. That is the financial institution. Then I told you already, financial intermediaries are the one is accepting the deposit from the public and advancing the loans to the companies or the individuals or governments. Okay, that is the financial intermediaries to help the economic functions of the financial intermediaries. And what are the financial assets and the liabilities of management of financial institution? So it's nothing but the financial assets like bond debentures and stock and bank deposits. These are all called as the financial institution asset. Okay. So the next point is the government regulations. The government regulatories are three categories here. First one is the SEBI, Stock Exchange Board of India. Then another one is the RBI and the last one IRDI. So here the Securities Stock Exchange Board of India, here we are able to exchange the securities or we are able to trade the stocks, shares, debenture and derivatives like that. Okay, then what is that? RBI. It's governed by Central Bank of India. It's nothing but in RBI money control, money market, and that money market. Then IRDI, it's a insurance, all the insurance companies. Okay, so then what are the primary reasons for the financial innovations? It's nothing but you are going to study, you are going to learn the what are the primary reasons for the financial innovations. Okay, so look at here in the down, I mentioned the stock market, national stock exchange, trading account, bank, stock broker, Bombay Stock Exchange, and the securities of Exchange Board of India. These all you are going to elaborately will study in this chapter. The next. So look at here. There are two aspects I gave: buy and sell. What do you understand from this picture? What do you understand? Buy and sell. As a commerce students, you must know the buy and sell. From these two words, you are able to say this is called as a trade. Yes or no? Trade is nothing but the exchange of goods and services. The exchange of goods and services, that is called as a trade. Yes or no? The commercial exchange of the domestic and international products. Okay, where the people they are buying and selling the goods, that is called as a trade. Yes or no? At the same time, in the financial, you can apply this concept in the financial market, where the people they are trading, or where they are traded the financial assets and financial securities, that place name we called as a financial markets. Okay, so financial market is nothing but the where the people they are, where the financial instruments like a financial assets and financial securities are traded, that is called as a financial market. Have you understood? The next one. So look at here, I mentioned the NSE, BSE and MCX. What is that? What is that NSE, BSE and MCX? What is this? What do you understand this? Is nothing but National Stock Exchange Board of India and Bombay Stock Exchange. Then another one is Multi Commodity Exchange. So here the financial market is having the physical location. There are two. One is the New York Stock Exchange and another one is the Bombay Stock Exchange. Okay. Then the financial market, it's the electronic system, that is the National Association of Securities Dealers Automated Quotations. Okay. So here I mentioned the financial market fund in transfer, the transaction it's transferred two sectors. One is the securities and another one is the commodities. The securities is nothing but it includes the stock and the bonds. Then the commodities are precious metals and the agricultural products and the oil and everything. Okay, so this is the, I mentioned that the National Stock Exchange, Bombay Stock Exchange and MCX. What is this? What do you understand from this picture? It's nothing but the financial market is having the physical location. Yeah, it's having the physical location and the electronic system. Okay, the physical location is nothing but the National Stock Exchange or New York Stock Exchange or Bombay Stock Exchange or Delhi Stock Exchange. Okay, then the next one is the MCX. MCX is nothing but the multi-commodity exchanges. What is the multi-commodity? We are able to exchange the commodities. What is the commodities? It's the precious metals and agriculture products, oil. Okay, so these are all the commodities. Okay, next. So look at this picture. What do you understand by the financial markets? So it's nothing but before we are going to enter the concept, the basic thing about the financial markets. So I'm running the business. I want the money or I want to expand my business operation. I don't have the enough funds. Yes or no? So in that situation, I want to borrow the money from the banks or other financial institution. Yes or no? So I want to initiate some projects in my business. I don't have the fund. In that situation, I am borrowing the funds from the financial institution. Yes or no? So that is called as a financial market. Okay, so the accumulation of the financial that the fund may be beyond my capacity in a reasonable period of time. Okay, so that is called as a financial markets. So look at in this picture, the one aspect is the investor and another one aspect is the borrowers. It's joined together, that is called as a financial market. It's nothing but I am investing the money to the bank. I deposited my fund into the bank. What the bank is doing, after some period, the bank is giving the how much I deposited. Say for example, I deposited 1 lakh in the bank. So later, after the 1 month or after the year, they will charge a certain percentage of the interest to me. Okay, so the return and gains from the bank. Then another one aspect, the borrowers, they borrow the money or fund from the banks or the financial institution. Say for example, X limited company, they borrowed a 10 lakh rupees from the banks. Yes or no? So the reason is they want to expand their business operation. That's why they borrow the money from the banks. Okay. So after later on some period, the bank receives some high rate of interest from that borrower. Okay. So that is called as a financial markets. Okay. The next concept, introduction about the financial markets. The financial market is a mechanism that facilitates the transfer of funds from the lenders to the borrowers. Is nothing but transfer of surplus fund to the deficit funds. Okay, to the surplus units to deficit units. That is called as a financial market. In other term, other example I will give you. In India, wherever you can go, there are two aspects are there. One is the household and another one is the producers. Who is called as a household? Who is the household? The people like you and me. Yes or no? So let's think. Your parents, they are earning the money. Yes or no? So they are earning. Maybe they are receiving the salary. They are spending your home expenses and everything for you and your family members also. Okay. Once you deducting all the expenses from the salary, maybe your father or mother, they will save some money or the surplus money, the surplus fund, they will save for the future. In that money, they will deposit in the bank. Yes or no? Bank or other financial institution. They invest the money for their future. They will invest somewhere. Yes or no? So, say for example, I am receiving my salary. After deducting my all expenses, I deposited my money into the bank. What the bank is doing? If the bank gets the money, when they have the extra money, they will give it to the businesses on the rate of interest. When the rate of interest is charged, what happened? The bank is earning. Have you understood? So here, I am having the money, I transfer to the bank. Okay, bank is giving to the other sector, that individual giving to the borrowers. Yes or no? So there are two aspects. The bank is earning the interest from the borrowers, and after that the bank is giving the lower end of interest to me also. Yes or no? So that's why I mentioned here the transfer of funds from the lender as an investor, okay, to the borrowers. Okay, then look at the next one. The institution and the instruments are integral part of the financial market. What are the financial institutions? The financial institution may be the bank, insurance companies, or money market. Okay, so they are integral part with the financial assets and the financial securities of the financial market. Okay, then the next one, the financial markets are in the international financial market also. Though here the funds flow across the national boundaries and the transfer in between the two parties. One is the residing in the different countries that comes into the existence the international financial markets. So if the funds are across, it's beyond its national boundaries, that is called as international financial markets. Say for example, RBI, the RBI transfer the funds to the America, okay, American bank. So it's called as international financial market. Okay, the next one. Meaning and definition of financial market. Meaning and definition of financial market. What is that meaning of financial market? Here I mentioned is nothing but when the financial instruments such as the financial client, financial assets and financial securities are traded is known as the financial market. So what is the financial client? What do you understand by the financial client? Do you know what is meant by the financial client? The financial client is nothing but I would like to buy a car. The cost of the car is 7 lakh rupees. Okay, the cost of the car is 7 lakh rupees. I don't have the 7 lakh in my hand. I have only 2 lakh rupees. Okay, have you understood? The property, the cost of the car is 7 lakh rupees. I have to climb to the car, rupees 7 lakh. But in my hand I have only 2 lakh rupees. So the remaining 5 lakh rupees I am going to borrow from the banks. Yes or no? So that 5 lakh rupees bank is going to claim and my claim is 2 lakh rupees. Together is called as 7 lakh rupees. That is called as financial claim. The thing is the down payment I paid 2 lakh rupees. The remaining payment 5 lakh rupees from the bank I am borrowing. That is called as financial claim. Then what is the financial asset? The financial asset is nothing but the bank deposit, stock, pension fund and the provident fund and the bonds. These are called as the financial asset. What is the financial securities? The financial securities are nothing but the shares, debentures, derivatives. Okay, these are called as a financial securities. So where these all they are trading or they are traded, that place we called as financial markets. Have you understood everyone? Then move to the definition of financial market. So what is the definition of financial market? Here, according to the Brigham and Eugene F, he says, the place where the people and organization wanting to borrow the money are brought together with those having the surplus fund is called as the financial market. He says a very beautiful thing. It's nothing but where the people like individual or the organization or industry, the people they are wanting to borrow the money, if they want to expand their business operation or they want to desire to take some project or initiate the project, okay, they need the funds. In that situation, they are going to borrow from the bank or other financial institutions. That is called as a financial markets and brought together with those who are having the surplus fund. Okay, is called as a financial market. The next, financial system. So what are the different types of the financial system? First one, the financial institutions, financial markets, financial assets and instruments and financial services. So here the financial institutions are like banking and non-banking institutions. So here the banking institutions are nothing but the commercial, cooperative and regional rural banks and the foreign banks. So and the commercial banks is classified the two sector. One is the private bank and the public bank. The commercial bank like SBI, HDFC and IOB and Indian Bank, like that the commercial bank. The cooperative bank, what are the cooperative banks? What is the cooperative bank? So here the cooperative banks are the Karur Vysya Bank, Central Bank and Karnataka Bank, ICICI. These are all the cooperative banks. Okay. So then the next one, non-banking institutions. What are the non-banking institutions? The financial institutions are there na? So like a Bajaj, LIC and Kotak Mahindra, okay, like that, that is the non-banking financial institution. Then the next one, the financial markets. In our Indian financial market, it's classified two parts. One is the organized financial system and another one is the unorganized financial system. So what is this organized? The capital market is under the control of the SEBI. Then the money market, it is governed by the RBI, under the RBI. Okay. So here, organized based on your book, the regulator is financial institution, financial market and the financial services. So what is that regulator is? The regulator is, I told you already, there are three regulatories are there under the Ministry of Finance. One is the SEBI, Securities Exchange Board of India. Then the second one, RBI, Reserve Bank of India. Then the third one is the IRDAI, Insurance Regulatory Authority of India. So here the organized sector, it's controlled the things, the financial institution, financial markets and the financial services. Then the unorganized is the money leaders and the endogenous bankers. Then the next one, the financial assets and the instruments. What is the financial asset? The financial assets already I told you, it's nothing but the public deposit, that money and stock, bonds, debentures, and instruments are the security, the instruments like debenture, stocks, derivatives, like that. Okay. Then the financial services. What is that financial services? There are two sectors of the financial services in our India. One is the fund-based service, another one is the fee-based service. What is that fund-based service? It's nothing but I am having the 30 acres of land, I am going to give the lease to someone. Okay, so that is called as I am leasing fund-based. Okay, I got I am giving 2 years of leasing my land. For that, I am going to get from the particular man, the particular people, 3 lakh or 2 lakh, like that. Then the next one, hire purchase, consumer credit, bill discounting, factoring, insurance, like etc. Then the fee based is nothing but issue management, merchant management, credit rating, debt restructuring, stock brokering, etc. Okay. Then look at here, our Indian financial market structure. It's broadly classified two parts. One is SEBI and another one is FMC. What is SEBI? Securities and Exchange Board of India. So he governs the equity markets and the depositories. Then the next one, what is that? FMC is nothing but the Forward Market Commission. Forward Market Commission. It governs the commodities exchange. So what is the commodities? I told you already, it's nothing but precious metals and the agriculture products. Then the next one, look at under the SEBI is classified two parts. One is the securities, future and option exchange, and another one is the depositories. So that one also it's classified two parts. So look at the first one, securities, future and option exchange. So here that one is classified two parts. One is the National Stock Exchange and another one is the Bombay Stock Exchange. So the depositories, it's nothing but the share certificate in the dematerialized form. Okay, the share certificates in the dematerialized form. It's classified two depositories in Indian market. One is the NSDL and another one is the CDSL. What is the NSDL? Is nothing but National Securities Depositories Limited and another one is the Central Depositories Service Limited. Okay. Then the next one, FMC. It's nothing but I told you already. What is that FMC? It's nothing but Forward Market Commission. What is that? Under that it's classified two parts. These depositories also hold the commodities in the demat form. The commodities market is governed by the Forward Market Commission. So here I mentioned MCX and another one is the NCDEX. So multi-commodity exchange, that is the MCX. What is that MCX? Multi-commodity exchange. Then another one is the NCDEX, that is the National Commodities and Derivatives Exchange. Okay. Then the next slide. Scope of Indian financial market. What are the scopes in our Indian financial market? The first one is nothing but financial market. It provides the financial assistance to the public. Okay, the financial market, it gives the financial assistance to the individual, organizational sectors, industrial sectors, service sectors, financial institutions like a bank, insurance sectors, provident funds, and the government as a whole thing. Is nothing but, say for example, SBI borrow the funds from the RBI. Okay, so yeah, SBI borrow the funds from the RBI. So the thing is, RBI is providing, lending the money to the SBI. That is called as the financial market. It provides the financial assistance to the SBI. Yes or no? Then the second concept is nothing but, if all the government or the companies, business firm, institutions or industries, the individual persons, if I want the required fund, I can get it from the financial markets. If I want the fund, I want to expand my business operation, I can get the funds from the financial market. That is the second objective, second scope. Then the third one is I can get the short term and the long term financial assistance. I can get the short term and the long term requirements from the financial market. Have you understood? There are three scopes of the Indian financial market. First one is nothing but I can get the assistance from the financial market. The second one, I can get what is my required fund, I can get on time from the financial market. Then the third one, I can get the short term and the long term funds from the financial market. So it leads the overall economic development. Move to the next slide. So look at here, our Indian financial market, it's classified different parts. So it means different types of the financial market. So here, the types of financial market: nature of client, maturity of client, timing of delivery, organizational structure. The first one is the nature of client. So here the nature of client is classified two parts. One is the debt market and another one is the equity market. So look at here, on the basis of type of the financial client is classified, that is the nature of client, it's the debt market, and another one is the equity market. So what is the debt market? Is nothing but the obligation to pay an amount of owing or borrowed from the financial institution or the banks. Have you understood? The obligation to pay an amount of owed or borrowed from the financial institution. Say for example, I am having I bought the washing machine. I bought the washing machine from Vasant & Co. Okay, I don't have the cost of the washing machine. The cost of washing machine is 30,000 rupees. I don't have the 30,000 in my hand. Okay, in that situation, I paid the down payment 3,000 or 5,000 like that. I paid 5,000. The remaining 25,000 I can borrow from the financial institution. Have you understood? So in that money, the 25,000 along with the interest rate, I can pay in the future. The installment basis I can pay in every month. Yes or no? So that is called as a debt. Have you understood? So it's the debt market. It refers to the financial market where the investor buy and sell debt securities, mostly in the form of bonds. Okay. So it's nothing but where the financial market is trading in the debt instruments. The debt market is financial market for trading in the debt instruments like a government bonds and securities, corporate debenture or the bonds. That is called as a debt market. Then move to the next one, equity market. What is called as a equity market? Equity market is nothing but where the financial market for trading the equity shares of company. Equity shares of company is nothing but the buying and selling the equity shares of the company. That is called as a equity market. Is nothing but if I buy the Reliance share or Tata shares, okay, so maybe I can purchase the shares. Maybe I can buy right now, I will sell in the future. That is called as a where I am trading these. That platform we called as a equity market. Okay. Then the next concept is on the basis of maturity of financial client. On the basis of maturity of financial client. So what is this? It's classified majorly in two parts. One is the capital market and another one is the money market. What is the capital market? Capital market is nothing but the more than a year. Shares, debenture, these all for long-term financial client. For the long-term financial client, borrowed na. So that is called as a capital market. Then the money market is nothing but it is a short-term financial client. Usually within a 1 year or less than a 1 year. So, like example, treasury bills, commercial paper, certificate of deposits. Okay. So, the participants in the money market, the RBI and commercial banks and the investor, LIC and other financial institution. In the capital market, its participants in the bank, investor and the mutual fund, like everything but controlled by the SEBI. Okay. Then the next one. On the basis of time of issue of financial client, it's classified two parts. One is the primary market and another one is the secondary market. The primary market is nothing but all the financial institutions that are involved in the sale of securities for the first time. Newly they are issuing. The first time they are issuing the securities. That is called as a primary market. So, here the money from the investor goes directly to the issuers. That is called as a primary market. Then the secondary market is nothing but the securities that are already they issued the stock exchange in the important institution in the secondary market. So already they issued the resale of the securities. That is called as a secondary market. Then the next one. On the basis of timing of delivery of financial client, here there are two parts, spot market and the forward market. What do you understand by the spot market? Look at the picture. One is the payment and another one is the immediate delivery. Or here I mentioned pay now, get it now. Okay, so it's nothing but the spot market is nothing but the spot market is nothing but look at that picture, you are able to understand the payment and immediate delivery. Here I mentioned the price paid immediately delivery of the asset. If they deliver the asset, immediately you have to pay the amount. Okay. Then the next one is the forward market. What is forward market? Look at that picture. One is to deliver in the future. And another one is the farmer, harvest a certain crop. Okay. So here, agree on the price on asset. Agree on the price on asset. So here I mentioned the price to be paid on the future settlement of date. Okay. The price to be paid on future settlement of date. That is called as a forward market. Then the next one. On the basis of organizational structure of financial market. There are two parts. One is the exchange traded market, over the counter market, OTC. Exchange traded market is nothing but the stock trade conducted by a centralized place. There is a centralized place. Buy and sell the conducted through the exchange. There is no direct contact between the seller and the buyer. That is called as a exchange traded market. Okay, so if I want to buy a Reliance share or Tata shares, I don't have the direct contact between the Tata consultants person or the Reliance person. Okay, with the help of the intermediaries, I can buy. Yes or no? I'm going to buy. So there is no direct contact between the seller and the buyer. Then the next one is the over the counter market. That what I mentioned, OTC. What is that OTC? Over the counter market. So over the counter market is nothing but there is no centralized place where the trader are made, the market is made upon all the participants in the market trading among themselves. Okay, that is called as a over the counter market. It is a decentralized market. It is a decentralized market. Example, forex. Okay, then the next one. So today you learn the concept of financial markets and the meaning and definition of financial markets, and what are the different types of Indian financial system and the different types of the financial structure and the scope of the Indian financial market, and what are the different types of the financial markets. These all you learn today. Thank you, my dear students. We'll see in the